all.
As technology progresses, it enables societies to advance. But innovations need to be understood and trusted and lift us all. In AI, medical, space, climate, technology unlocks human potential. And rules we design today are as important as the technology we create. It's how business delivers technology safely into our hands, and how countries leverage innovation. This partnership between transformative technology and purposeful policy drives growth, ensures investment, builds better societies, and powers human progress. We make innovation work for the world.
Good morning, good afternoon, good evening all. Welcome. Thank you to my guests for showing up. This is Access Partnerships Fintech's role in SMEs and inclusive growth. I'm Peter Lovelock. I'm the Chief Innovation and Delivery Officer here at Access, based out of the Singapore offices. And with me, I have 5 experts to look at this issue of fintech, which we're going to look at in fairly broad and far-ranging terms. I'm going to go around the panel and get each of them to introduce themselves to you and start taking their first thoughts and then move through the moderated conversation. But just for everyone's starting pleasures, I thought I'd try and lay a few building blocks to move from. I want to start there's a lot of talk over a while now about fintechs and fintechs in the role of aiding SMEs and driving inclusive growth. I want to put out 3 suggestive hypotheses. One is that we still have a long way to go in terms of inclusion. So what are we doing wrong in that regard, and what have we been doing right? Fintech was meant to be one of those things that, in terms of financial inclusion, really accelerated the gap that we had there. So what's stopping us, and what do we need to be doing further or differently to really accelerate and drive that inclusive opportunity? The second hypothesis is, and please challenge these, that governments still see fintechs as disruptive. And while that isn't necessarily incorrect, I'd like to posit that maybe that's not the correct lens for governments and regulators to be looking at the fintech players through. That while it is certainly disruptive to bring new players in and look to broaden out the financial services sector, that the way we ought to be looking at this is as a friend to economic development and as a friend to that inclusive agenda. That governments need to have more of a typology for engaging with fintechs and finding out the ones that are safer, that really can drive that inclusive growth, rather than seeing them as the other. A sub-theme which, if we have some time, we get into is around things like regulatory sandboxes. We still seem to see regulatory sandboxes as a one-size-fits-all, rather than recognizing they're doing a multitude of different things. And therefore, for really interesting fintechs, often they don't want to enter sandboxes because it's seen as a slow and arduous process, rather than something that would aid their way into the market without presenting any systemic threat to the economic development or the social agenda. And the third I'd like to see if we could touch on is to posit the statement that the future really is about integrated payments. And how do we need to look at that as we go forward? How much of a change will that be? And what is the role of banks and the more antiquated or legacy financial system when we start looking at integrated payments as the way forward? And so with that as an opening set of thought bubbles to help frame some of the conversation, let me introduce some of the players in the session today. I might turn first to a very good friend and colleague, Amira Karim, who is the public policy lead and for payments and financial services at Amazon. Amira, you might just want to start by telling people your focus and giving your first couple of thoughts, please.
Sure, happy to do that, Peter, and thank you for those opening thoughts. Hi, everyone. My name is Amira, and I look after public policy and regulatory affairs for Amazon's payments and financial services business. And prior to that, I was working in a fintech called Stripe that is specializing in cross-border payments. And my role there was primarily to look at Stripe's market expansion efforts while also developing Stripe's public policy advocacy team. It was a very exciting time, and I can tell you more about that in the conversation. But I also have a lot of background in development. I spent a couple of years in the World Bank in Washington, D.C., and in Asia, essentially implementing digital policies that were meant to facilitate financial inclusion. So this is a topic that's really near and dear to my heart. And prior to that, I was in the Singapore government looking at trade and financial services policies. So really looking forward to the exchange, and thank you, Peter, for the invitation.
Thank you very much. Move next to Flora Coleman. Flora is the Global Director of Policy and Government Relations for Klarna. Flora, welcome and thank you.
Thank you so much for having me. It's so great to join all of these esteemed panelists and be here. So I head up Global Policy and Government Relations at Klarna, having been there for around 3 years. So Klarna is an established payments network and shopping ecosystem with 150 million global consumers and 500,000 global retail partners across more than 15 shopping verticals and retail verticals. So the key word really is Klarna is an ecosystem. Our mission is to accelerate commerce. So this webinar and these topics are really important to us, and because of the value in driving an effective digital and shopping ecosystem that delivers for consumers their best needs rather than entrenching the interests of a small number of global companies. We really view ourselves as an ecosystem player and an ecosystem driver. My background, I've been in Fintech for over 8 years now, which is relatively long time for someone with a specialism in policy, having worked previously to joining Klarna at the international money platform Wise, and before that I worked in UK government and policy. So that's my background. So really open to conversation and discussion, and particularly thinking about that accelerating growth and inclusion and how financial services can do so. And I was at the International Consumers Global Summit in Kenya at the end of last year. And it was really interesting to see how we can actually be looking to drive financial inclusion and how that's a key pillar of our sustainability delivery as businesses and as organizations, and how we can work with global and local organizations in order to deliver financial inclusion. And then also about thinking about, Peter, as you said, integrated payments. This is something that really will drive consumer opportunities, but also I'd say along with integrated payments, it's a diverse competitive market. And that's one of the key challenges that we've seen historically, that technology is unlocking greater diversity and more competition, which is incredibly important for better outcomes for consumers.
Thanks, Flora. I want to come back to the point about the participation in the conference in Kenya as a lead-in to how governments are looking at abetting the participation of fintech in global south markets in particular, whether we're getting the licensing frameworks right and how this works. But we'll wait till we come around. If I might just pick up on Klarna's participation and the point about building the ecosystem. How right are we getting that in terms of, particularly from a standpoint of financial inclusion, how right are we getting the building out of that ecosystem to date in your mind?
So I think the key challenge has been the international cooperation to deliver competition and the lack of focus around competition globally. So post-financial crash, most regulators and markets moved to protective models in order to stop consumers from ever experiencing risk again. A key difference in the UK was explicitly adding competition to the mandate of the regulator and saying that competition and a diversity of providers and are moving away from the concentration into traditional banking providers would deliver better outcomes. And so I think we're not quite getting it right. And that's partly because countries take an anti-risk approach. So consumers must not experience any challenges in financial services, any drop-off in service, but also too afraid to challenge the big orthodoxies, the big businesses, and drive that competition. And so if you look at the delivery of mobile phone number portability and what that delivered in terms of the mobile markets around the world, is it just drives huge switching, and we don't have that proper effective switching of banking and financial services effectively. So that would be my key. I think we haven't got it right, and that's partly because of a lack of focus on competition, and partly because of a nationalistic approach versus an international cooperative approach where we try to work together. So that's where, going back to things like, so Consumers International is the global consumer charity that sits above your local consumer associations like Choice in Australia, or Consumer Reports in the US. And they bring together all of these local consumer organizations, as well as now, more recently, businesses, to help to drive these sorts of objectives and international cooperation. And I think that's one aspect where certainly you can see the EU's possibly done a little bit better because of that multiple nationalities really effectively cooperating on financial services policy, which we see less of in international cooperation in other markets.
Okay, thank you. That's really helpful. Let's shift to Rami. Rami Amin is the Director for Global Engagement and Innovation at Visa. Rami, maybe you can just give a quick background on yourself and your initial thoughts, but you might segue from that into whether you're one of the big players that Flora is pointing to. I'm not sure if you are or not, whether you're the original fintech or whether we need to look at you as part of the legacy system at this point, but please.
Great. Yeah, I'm happy to respond to that. And first, Peter, huge thanks to Access Partnership for the invitation to participate on this panel. I've been a huge absorber of your guys' work over the years. So it's exciting to be on the other side to push forward the discourse with some views from Visa. As you said, I'm the Director of Innovation at Visa. I'm based in Washington, D.C., here in the United States, and our headquarters is over in California. My role, it really has three different prongs for what innovation looks like within Visa. We support product incubation. We do research and insights and thought leadership around innovation. And we also have physical innovation centers scattered across the globe where we invite fintechs, SMEs, as well as policymakers, development banks, central banks, and others within the broader payments ecosystem to come and explore with us, to look at what sort of solutions might make sense for them, where we can work together on new solutions, but also, we invite these platforms as starting points for discussions with policy and regulators. In my role, I really sort of work across bringing all of these three different prongs together within Visa Innovation, and I have a heavy role around the thought leadership side. Prior to joining Visa, like Amira, I was also at the World Bank for many years. I think it's hard to get on a panel around this kind of topic without finding some sort of World Bank or IFC background in some way in one of the panelists. I worked in emerging technologies, and the focus of my work was really trying to help governments flesh through the latest emerging disruptive technology that was causing confusion around what are the real opportunities in terms of utility with use cases? 2, what are the potential risks? 3, what are the costs? And then 4, what are the policy and regulatory conditions for an ecosystem that for clients of the World Bank might make sense to get in place so that they can foster uptake and adoption and remain competitive in rapidly changing global competitive markets. The specific technologies that I would focus on, that I would help clients with, were around advanced mobile networks, so 4G technology, 5G technology, and beyond, as well as cloud and data infrastructure, and the latest with AI and generative AI applications, risks, opportunities, and so on. I think development finance, I think once you've come from that space, it really, it colors everything in my entire lens of how I think about global South challenges as they continue to evolve. Before I joined the World Bank to focus on emerging and disruptive technologies, I had a career in academia. I led a research institute at Oxford University, focusing on interdisciplinary and innovative research within the academy. I also worked at MIT and Harvard universities here in the United States. And prior to that, I was at a startup in Hong Kong, about a dozen staff members, so small, focusing on what was then called virtual asset trading, a phrase which means something very different today. This is 20 years ago. So between academia, development finance, working at a startup, and now, working at, as you said, Peter, the original fintech startup, which we're still very proud of today, and what we try to continue to live up to. I've got a lot of different perspectives on looking at some of these challenges and some potential solutions. So I'll pause there.
Let me thank you for that. You've given us a lot of context for digging into. Let me shift over to Diana. Diana Baitler is the Senior Vice President for Strategic Partnerships and Government Relations at dLocal. You're going to need Diana to just give a quick brief on who dLocal is for some of the audience. However, I'm going to ask you then to start to help me, because it sounds like the three players that have come before you might be some of my challenge here. We've got World Bank and academia and government relations people who look like they might be setting up some of the ecosystem that I'm hell-bent on challenging right now. So help me out. Over to you.
Thanks, Peter, and thank you, Access Partnership, for having me today. It's a pleasure to be on this panel with these esteemed colleagues. Let me start by introducing dLocal. We are a fintech company listed in NASDAQ. We went public 2 years ago and are now operating in 49 emerging markets. Our vision, our mission as a company is to unlock the power of emerging markets, very much along the lines of creating and promoting inclusive growth. We understand that over 80% of the world's population actually lives in emerging markets, yet they unfortunately do not have access to international credit cards or actually pay for global services, products and services using alternative payment methods, such as digital wallets, even cash, instant payments, and things of the like. And so what we do at dLocal is basically enable the 80% of consumers in emerging markets that actually use alternative payment methods to access global products and services, and we basically accelerate that the democratization of those services for the global South. Just to give you a sense of how large we are at the moment, we've enabled 154 million unique users over 2023 to basically purchase those products and services internationally. And it's we take a lot of pride in it because for those that are not necessarily familiar with the financial system in the emerging markets, it's actually really hard for a consumer to be able to pay for a Netflix subscription or for a Spotify account if they don't have a way of doing so with alternative payment methods. And so what we're helping to do is for those consumers in the global South is actually, we're flattening the curve so that they're actually able to access these products and services. In addition to being difficult from a payment method perspective, as everybody would know in this panel, payment systems and regulatory environments in the global South are actually pretty unstable and fragmented. And so the role that dLocal does is basically enable these global companies to provide services to emerging markets with us taking almost the pain of having to deal with those fragmented and complex regulatory environments for them. I can tell you a little bit more about that later on and how it works. We take quite a bit of pride on this sort of one API model of enabling a large global merchant to access billions of consumers in the global south through a single contract and one API. From my perspective, I will say, much like everyone else, I do come from the development world too. So it's a pleasure to be amongst people that share similar interests and, well, same interests and similar career journeys. I did start off in Washington, D.C. as well, Rami, but I was at the Pan American Health Organization back then. And have been in academia as well, having had my PhD from the London School of Economics. Pleasure to be here and looking forward to the rest of the discussion. Thanks, Peter.
So just before I move on, Diana, are you, given the numbers that you started off citing, do you agree with the hypothesis that we're still a long way away from financial inclusion and there's still a journey to go? And from what you're saying with the model that you're taking out to the world, are we, from your perspective, or are we at a pivot point now where we should be able to see this accelerate?
I very much hope so, but I would agree that we're just scratching the surface. I mean, if you look at the numbers for a startup like ourselves, 154 million unique users seems like a lot. But if you think about, the 2 billion adult potential consumers in the emerging markets, it's a very small number. I mean, the rest, at the moment would have to be quite creative to be able to access the global digital economy. And when I say that, I'm referring to things like using VPNs, prepaid cards, virtual phone numbers, virtual addresses, PO boxes, you name it. And so in order for, the rest of the billions of folks that, do not have this kind of infrastructure in place to do these payments, it's incredibly hard. So a global company wants to expand into, exciting markets in Latin America, Africa, some parts of Southeast Asia. And the first thing that a consumer in these markets is going to think about is, how am I going to be able to pay for this? And it's going to have to resort to all of the things that I was just describing, in order to be able to figure that out. And so I think the kinds of innovation that are coming from the fintech space, much like what the local is doing, is definitely helping. There's a lot more we can do to accelerate that inclusive growth that we're all aiming for.
Okay, thank you. I do want to dig in with that as we go forward, as to therefore, what is it that we're still getting wrong in building out the ecosystem, and what can we do a lot better if we're going to accelerate this? So let me move over to Mimi. Mimi Zo is the co-founder of Deriskly, and she comes to us from sunny Sydney.
Yes, hi. Well, hello, everyone. It's nice to join this panel. And just a bit of introduction to myself. I don't come from a development background, so maybe I'm the odd one out here. The origins of my career was in commercial legal practice. We all make mistakes sometimes. I then ventured into academia, and when I was faculty at Oxford University, I founded the first legal tech, reg tech lab. After the lab wrapped up, I joined forces with computer scientists at Oxford, and we founded Deriskly. And Deriskly's mission is to help financial services firms develop innovative reg tech solutions, ultimately to enhance trust with retail customers. So we do work with banks, credit card providers, and fintechs on solutions that are compliance oriented, but that targets consumer protection. And so consumer protection regulations, we know, some people might see it as a barrier. I think that from my point of view, having worked in financial regulation for many years, and now moving into the fintech, reg tech space, I do think that actually, instead of seeing regulation as a barrier to innovation, I actually see it as a driver for innovation. So our company has really paid attention to shifts in regulatory paradigms for consumer protection in the global north, but also increasingly in the global south of developing economies. And our latest solution, for example, is an AI-powered machine learning-driven data-based solution that helps financial services firms, including fintechs, particularly fintechs, to boost the understandability of the communications and promotions to customers so that they can make informed decisions. And we're the first solution of its kind to take into account different types of characteristics of consumer groups based on age, income level, education level, experience with existing products, etc. So it's based on a scientific framework that we have developed that really aims to improve not just the clarity, but also the compliance elements of communications. So in the UK, we have this massive regulatory framework called the Consumer Duty that's just been introduced, which really is trying to get banks and all financial firms to do the right thing. And part of it is actually to communicate clearly to consumers what the risks, what the charges of products are. So far, obviously, this has been a problem. And I think fintechs do face this problem, especially with new products. They're not able to explain it clearly, and they might run into not just compliance problem, but ultimately it's a trust problem. Consumers may need your product, but obviously they might be skeptical because they might not understand fully what you're offering, including some of the risks involved. And so that's the sort of innovation that Deriskly is coming up with to support this ecosystem and really proving the kind of, the idea that innovation, that regulation is a barrier to innovation.
Jen, thank you. So I love the idea that regulation is a friend to disruption and regulation is a friend to aiding the growth of the ecosystem and, when we get it right, the fintechs. But let me dig in straight away there. I hear from Flora, and I give Flora an immediate chance in a second to correct me if I've got this wrong, but I think I hear from Flora that we've gone through a phase where a lot of the framing has been anti-regulation. And so we've seen I think I would paraphrase as a lack of appropriate competition, free and fair competition. So how does this square, therefore, with what you're seeing and where you see regulation as being a friend right now? What is it we're getting wrong there? And how would we, if I am paraphrasing that correctly, how do we begin shifting from a anti-risk phase to a more risk management phase, which would be how competitive markets really need to be formed? To you, Mimi, just digging in on that last set of comments.
So was it to Flora, to me? Okay.
To you, please.
Yeah, absolutely. Yeah, absolutely. I think, and I'm not saying all regulation's great. I think that it has to be carefully designed and involving all different stakeholders in financial services, not just the incumbents, but particularly the voice of fintech is very important. And I've been involved in a number of sort of fintech advocacy groups in the UK as well. So I think when carefully designed, regulation is there to actually enable new products and services. I do see that the whole point of, say, the consumer duty in the UK and other jurisdictions are looking at similar regulatory developments at the moment in both developing and developed countries, is really to reduce the risk of huge scandals. Because when huge scandals happen, let's take the big mis-selling scandal, almost 20 years, 2010, 2011, that was over payments protection insurance, which, right now there are about 30 billion pounds of compensation or redress to consumers. And that figure is increasing all the time. And that involved so many players in this particular segment of the market. And I think that really undermined a lot of consumer trust. So in some ways, regulation does, it takes a long time often for it to respond. But I think when it's designed carefully, and when the UK takes the FCA, I think does try to balance out all the different factors. It doesn't want to stifle new products, but at the same time, it wants to protect consumers and prevent these sort of big scandals, which really undermine consumer trust. And so when regulation gets it right, when it balances all these different stakeholders' interests, I think it actually can lead to growth of new products, allow new players to come in. And, competition laws is also a prime example of how regulation can actually help to protect the ecosystem for fintech, so that they can actually have a chance, maybe not an equal footing, but at least have a chance to and challenge some of the incumbents. So I think we need regulation. I mean, obviously I'm a lawyer, I would say that, but I think the more that I work with fintechs, and we are running a regtech fintech company, I see that it really can be a friend and can promote growth of fintechs, particularly in the area of financial inclusion, to enable trust, consumer trust in new products and services.
Flora, am I characterizing what you were saying correctly? And how do we shift more to a risk management approach for governments, for regulators, as much as the private sector, rather than a anti-risk approach?
Yeah, I think you really captured our kind of thoughts around competition. And, that's one key aspect, but I also want to echo Mimi's view. I think all of the fintechs and financial services players in the room would be big supporters of regulation like Klarna is, and particularly it's looking for the right sort of regulation, especially. So one of the key things we've heard a lot of talk about worldwide is outcomes-based regulation, but there's not been a huge amount of delivery of that. And so things like, capital adequacy ratios is just like a random example where you go, here's something we want to aim for, and then if you're achieving it. So in what we do at Klarna, one of the biggest products we offer is delayed payments, so either paying in 30 days or paying in installments over a short period of time with zero interest. So there's no additional cost to the consumer on top of the cost of the item and delivery. And in those ones, we're seeing very prescriptive regulation around worldwide around precisely the wording you've got to state to consumers to help them make a decision, or businesses to help them make a decision. And those kind of things are very narrow focus. They're often untested based on consumer insights and behaviors. And then we see kind of funneling of consumer behaviors into different things, but we still see risk coming through. Whereas instead, if you have outcomes-based regulation, where you were to say that every provider needs a less than 1% default rate, you'd see innovation from the fintechs and from the financial services providers to best achieve those outcomes and reduce their defaults and reduce their risks. And so this is something we're really proud of at Klarna, is our really low default rate. And we'd like to make sure that everybody's aiming towards those so we can innovate with the right ways. A younger consumer is going to want to see a video on TikTok. An older consumer is going to want to read the contract and have that pre-contractual information, even though actually the majority of consumers, pre-contractual information isn't useful to them until there's a problem. We know that consumers don't want to read it, they don't want to engage with it. So actually, how do we capture the information the right way? But instead, we have this deterministic regulation right now coming from regulators worldwide. So a big thing, I think, that would really help drive innovation and support different types of consumers, be they businesses or small individuals, is, they have a lack of power in negotiations. So instead, let the firms innovate to find the best outcomes for them. And the other is, of course, is proportionate regulation, is really looking to see that we're not moving for regulation where there isn't a problem. We've got to focus on where there are the big challenges and looking at tighter requirements for products with higher costs, where there's more risk to customer well-being, and focusing instead on those as opposed to the sort of, so certainly with AI, global regulation of AI, this is obviously a hot topic in financial services, but also more broadly, is thinking about how do we make sure that we're anticipating where the actual scandals will be versus shutting down the innovation that might drive the unforeseen benefits that we just don't know are going to happen yet. Yeah.
Amira, you've been very patient. If okay, I won't turn back to you. I guess I want to pivot more to where Flora was finishing there. I would even look at the foreseen benefits as much as the unforeseen benefits. I worry with an overly risk-based approach, and I like the shifting to an outcomes-based approach, but with an overly risk focus that we risk cutting off so much of the benefits that will come from enabling not just the other 80% that Diana gave a shout out to, but the SMEs, the smaller companies that may be sitting in the middle of big urban centres that are having trouble getting access to a lot of these financial tools and facilitating a lot of innovation. I would posit that digital transactions really sit as the lifeblood of the digital economy at this point in time. And if we're going to fuel the benefits of the digital economy, we've got a multifold challenge where you've got many regulators and many regulatory interests who are looking at what become digital transactions, and there's a problem there that we need to clarify. I appreciate that all of you folk are going to be interacting with regulators, and so you can't be too offensive to regulators and call out some of the mistakes and challenges you might be seeing. But I do think we need to guide them as how they need to look at these frameworks if they're going to see the benefits. Amira, you sit at the heart of the digital economy, sitting there in Amazon. I wonder how you see these questions of enabling that ecosystem growth and what can be done to build off digital economy plans through digital transactions recognition. Any thoughts?
Yeah, several. Thank you, Peter, for that question. It's always really interesting to think about the ecosystem effects. But before we go into answering the question, I think it's really important for us to unpack what we mean by regulation. I think that, regulation is more than just a set of rules or laws, right? I think regulation also involves a supervisory approach or a tendency, a modality of delivering or interpreting and articulating the rules that are in the letter of the law into an enforcement mechanism that can be predisposed towards promoting innovation. And some governments do a really great job of this by kind of collaborating with industry to come up with, ways to express creativity and innovation while also abiding by certain customer protection rules that need to be put in place. And the rest can be taken on in a more modular approach. And you see this across activity-based regulation that look precisely at the kind of payment activity that is being implemented, whether it is remittances or lending or, cross-border or domestic money transfers, and looking at the core of those set of rules, but also then working with industry to see what can be, applied in a way that makes sense and also promotes innovation. So it's a supervisory mentality and an approach that I think can also be supplemented by policies. I think, to Mimi's point and to what Flora just mentioned, I am often, kind of taken aback by just how critical, ensuring that there is a level playing field is to building, an ecosystem. So, take it from the Amazon perspective, right? We serve thousands of SMEs that utilize the Amazon marketplace to sell products around the world. And for those SMEs, enabling financial inclusion means having greater access and also having not just access, but also affordable access to financial services. And because of this, we work with the likes of dLocal and a lot of other kind of local players, as well as global companies like Visa, to create financial systems and financial services that are fit for purpose. And they're very hyper-localized. So I think that when we think about regulation, as we kind of think about the supervisory approach, we should also be cognizant that they have to be supplemented by policies that level the playing field, that promote investments, that promote innovation, and I think also go to the heart of the core elements of what payments is. If you break down the payment system, it's really not just about, funds flows, it's also about identity. And many countries around the world are still grappling with identity systems that allow for those risks and customer harms to be addressed, while also ensuring that you can apply the innovative local payment methods that dLocal represents and that the likes of Klarna can offer for financial inclusion. So it's really that multi-stakeholder approach I feel is lacking and needs to be further enhanced, and can also be enhanced by a lot of better coordination across government agencies. The other thing I wanted to talk about also, as we think about SMEs, and there are many different kinds of SMEs, so I don't want to be overly generalized, but for SMEs that are expansion oriented, and many of them tend to be at a certain maturity stage, right? They're really evolving in their expectations of e-commerce marketplaces and payment service providers. They don't want just to focus on acceptance or disbursements. They need the likes of Amazon and those around the room to grow beyond traditional functions, to encompass tools for helping them manage and grow their businesses across borders, right? And this is really where embedded finance is a really exciting trend. But apart from technology, I think what we need is regulatory interoperability. We need regulators to come together and have a coordinated response to identify how regulation in things like payments, identity, cross-border data flows can be more interoperable with each other. I know this is a big concept, and I'm happy to delve in deeper, but I would be remiss if I didn't call out the fact that technology isn't going to solve everything, and embedded finance is really critical, but that regulatory interoperability is the missing piece, I think, that needs to be addressed going forward.
Is there, for those, we often get a lot of regulators watching these, if you had regulators watching this, is there a regulatory model or example that you'd point to, particularly on some of the latter topics like the interoperability of the systems, identity, and embedded finance?
I'm very much encouraged by the G20 effort to develop the cross-border payments roadmap. Amazon has been involved in some of the industry consultations that have given us an opportunity to have a seat at the table on behalf of our customers by sharing, our thoughts on things like anti-money laundering and know your customer protocols, but also giving them insight into licensing frameworks that can be aligned across the board so that our partners don't have to apply for 6 to 7 different licenses in order to provide services to the SMEs on our platform. The other example that I can think about is, aligning on a definition for local and cross-border acquiring. And I know that is a hugely controversial topic and has been for a while in the payment space, just because of all of the risks associated with cross-border acquiring. That is a critical element to ensuring that payments is not only interoperable and can facilitate cross-border transactions, but also affordable. Because at the end of the day, SMEs are not going to pay for a service that is going to cost them an arm and a leg and that prevents them from actually having cash flow, right? And so I'm very heartened by the work that dLocal is doing, that a lot of other local fintechs are doing, in order to also provide feedback into these multilateral efforts. I think that's a place where the likes of marketplaces, payment service providers, fintechs, and also our traditional financial services partners can play a role to define better and to align.
Yeah, it'd be nice if we had the time to dig into that as a topic on its own. The idea that local and cross-border acquisition has been such a big topic for so long. It strikes me that in the new world in which we're in, it's a question that is actually far easier to answer than to redefine the question. I think we have most of the tools at our disposal right now, but we have an infrastructure that's struggling to accommodate that. Diana, you're at the pointy end of this whole revolution. If I pick up on that last point that Amira was taking us to, where would you point to for regulators to look at, and what are the key things they need to be thinking of as they try to encourage this facilitation of their ecosystem and their digital economy?
Thank you, Peter. I think actually what Amira was saying was literally spot on. That's why I kept smiling, because she said it better than what I could have. Thank you, Amira. So I think for us at dLocal, we're very concerned about enabling cross-border payments, because at the end of it, that is at the core of what we're trying to do, and enable these payments in 2 flows. We call them pay-ins, which means consumers in Global South paying for Amazon services, or their Amazon Prime subscription, but it also means payouts. So when large global companies are actually paying for products, services, or even freelance workers in the global south. So there are sort of two sides of that flow. I think working on that interoperability, cross-border would be incredibly helpful, both from a sort of data protection perspective, because it is users at the end of the day that we are enabling to either access finance and or paying for services, but also, really thinking about sort of that cross-border, enabling that cross-border payment and flow of funds, from, at the moment, very, very different parts of the world. I was really interested in a comment that I think Amira was making about remittances. If you think about where the vast majority of the remittances are going to, in Africa, for example, the largest market receiver of remittances is Egypt. And in addition to the traditional G7 that you would expect sending, funds to the global south, and the largest emitter or sender of those remittances to Egypt was actually Saudi Arabia. And so really helping regulators to think about that interoperability and more broadly, frameworks for collaboration for cross-border payments, across the world, right? Beyond the sort of traditional G7 frameworks, and really thinking about, a global economy that is now increasingly truly global.
So if you were to talk to this, given that last point, if you were to talk to the Saudi regulator and the Egyptian regulator, or the policymakers, let's not just focus on regulators, because policymakers try to push the growth agenda, the opportunity agenda, where would you tell them to focus in being able to facilitate the growth and use of that remittance, that cross-border transaction flow in a positive direction? How would you tell them to look at that?
I would say, to be honest, the transaction or the cross-border payment is just the enabler.
Yep.
And we think of ourselves, at the local and within the sort of, I think, the fintech industry more broadly, as just an enabler. If I were the policymaker thinking about this, I would be thinking about the outcomes that those remittances are actually, enabling my economy to create. So if I were in Egypt, I would be thinking about, how to enable economic growth for my citizens, for the people in the market, and the opportunities that those funds would actually create once they enter my economy. I would be thinking about, ways of regulating it so that you prevent things like fraud, money laundering, etc., as opposed to fixating on, or maybe not fixating, but the fintech space is the enabler. I think the opportunity has a lot more to do with what the funds would enable, the citizens of those markets to actually do.
So before I move to Rami, and Rami, I'm setting you up so you have a chance to think through this and putting you on the spot, Diana, could I not frame this as, rather than starting at the AML, CFT part of the market, the place we start for financial service system regulation, I start at what the outcomes may take us to, the foreseen benefits and challenges of what it could enable, and I begin working my way backwards from there so that I put the appropriate guardrails in place to help drive this, recognizing that I'll then need to be a bit flexible and adjust as I go. Would this not be a way of trying to really accelerate that motion?
Precisely. You would basically think about, the outcomes that you want to generate for your economy, and then work backwards to put those guide rails to make sure that those outcomes are achieved, and that you collaborate, right, with other markets in order to make sure that those guide rails are actually consistent.
Yeah, so in a few minutes after Rami's answered the next set of questions, I'll come back around. I would challenge any of you to come back, and I recognize I'm the one who gets to put the provocative questions and statements out here, but which regulator, which market is coming closest to coming to that approach? Because my suggestion would be that's almost a revolution in how we set up the way we're trying to establish our market growth. that we come from that end of the telescope rather than the financial service systemic end of the growth. But Rami, without putting you on the spot there, because the others will have a chance to think about it, we started with you, this suggestion, you being the original fintech. You sit on something of a perch, but you cast it well when you were talking about the role that you play of Visa sitting there and looking at the innovation agenda. How can we drive out innovation where we are right now? We've got a lot of market rails that we operate and we facilitate across. If there is anyone who has helped solve that interoperability position in the finance space, it's you guys. You have perhaps the most preeminent fraud mechanism out there in many ways. What would you be advising in answering the questions that have come from the previous three in particular of this interoperability of regulatory frameworks agenda we need? Where would you be suggesting that we push for frameworks to adjust so that we can foster this?
Yeah, thanks for the question. And everything that I've heard so far resonates strongly with how we're talking about this on the Visa side. Regulatory compliance is absolutely one of the key issues that we would cite from our experience of one of the key barriers from SMEs being able to adopt the latest fintech solutions, or indeed just any kind of digital payments solution. One of the great things about being at a place like Visa is the amount of decades that it has been around through the entire revolutions and evolutions into the digital economy, operating across 200 plus countries and territories. It's interesting to think about that coming from the World Bank, because very few other organizations can sort of claim we also operate in 200 plus countries and territories. And Visa, just by sheer legacy, and has the ability to be able to say that, but also to be able to take some of those insights from decades of working in these very complex ecosystems with totally different regulatory and policy frameworks, and try to find ways to not just operate in those markets, but increasingly win in those markets, as they're far more competitive than ever before. There's incredibly exciting and robust domestic fintech solutions that are now being homegrown, and not just in digitally mature markets, but even less digitally mature markets where you might not expect to see some really innovative concepts and solutions to solve some very hyper-local challenges. And maybe something I can bring to the discussion, beyond a lot of this is focused around regulatory compliance and how to approach that and talk to regulators. I sit in a really unique position as I'm sort of at the nexus of our government engagement team and our innovation team. So we wanted to think about, one, what are the conversations to have with governments, policymakers, and regulators to inform them, to yield them insights, but also how do we set ourselves up for when we see policy and regulatory trajectories that are on the horizon? How do we set ourselves up to be ready to support all of the local domestic players once the policies and regulatory conditions go into play? So some of the other challenges that we have identified beyond regulatory compliance is, we often see high costs of technology adoption. We see a lot of misinformation or lack of information, a lack of knowledge around what the latest fintech solutions are, what their benefits are, and how to actually integrate them with existing technologies, how to make them work within the existing business models. There's, you brought up Visa's unique position around fraud. There's a lot of questions around when you want to bring in a new payment system, what exactly are the real security concerns when you're constantly inundated with news reports daily and massive losses? So there's huge risks concerns. And finally, there's sometimes resistance to change. And even within fintechs, when you're thinking about global South countries or global North countries. So, we try to align our overall financial inclusion strategy to really address all of these challenges, not just the regulatory and policy side, but all of these real practical challenges. And so from our innovation side and from our social impact side of Visa, as well as from the Visa Foundation side, we bring all these different units together to support financial education for SMEs, to bridge gaps in knowledge, to resolve any sort of misconceptions that we see, because they're not just on the policy and regulatory side. We do work with partners to increase access to credit, which is required in many of these contexts to finance the adoption. And we work in partnerships with governments, partnerships with international financial institutions, such as the World Bank, as well as partnerships with civil society and trade associations, such as the GSMA, which has a partnership we just announced yesterday, which is hyper-focused on precisely the theme of the discussion today. So I think maybe I'll pause there on highlighting how all of these different components are what we try to bring together, bring in the lens of our 60 years of being in this business to maximize as much insight as we can and create value for our clients across the world, not just SMEs, but really businesses of all sizes.
I think, like a couple of your colleagues on the call here, you're being not only insightful and wise, but very diplomatic and very generous. I'm surprised no one's pushed back more, as I keep saying, regulators, and trying to say, but regulators are all different. They've got different roles to play. They're different looking. They have different objectives. Stop talking about regulators as though they're holistic. Luca, I know we've got some questions coming in. Are you able to give us a view of some of those questions? There we go. So I'll start on this in a minute. I'll give you a chance to take a look at the question. But one thing I'd put out there, which if I was going to push you hard, I'd keep going. I just had the CARIC region 10 economies in the room for several days last week in Georgia. And all of them kept talking about regulatory sandboxes. And after a while, I said, I don't think you know what you're talking about. And I ran through each of the, because they all have, bar two of them, have regulatory sandboxes. And they're very proud of it, as they should be. I said, they're all doing something different. You've used them for different things. And so you've got a problem here in that you open these things up to facilitate, but little players come in and then that's it. And you've tended to do them for one or two, and then people get bored with this thing. What about if we gave them all a passport so they're in the economy? You keep talking about a regional hub. How about if we gave them access to the entire region once they've successfully graduated from one of your sandboxes, they could now get recognized? And they hadn't even thought about this. We literally ran through what the sandboxes were being used, and they were wildly different by and large. I would position that you guys are all wise financial people with good development backgrounds. I'm an old telco guy. Back in the day when that other strategic industry, telecommunications, had to get liberalized and facilitated, because, as opposed to how much financial inclusion, we've got an awful lot of telecommunications inclusion out there. We basically tied one hand behind the back of the incumbent so that the innovators, the upstarts, actually had not a level playing field, but a tilted playing field to get in there and actually start skimming where they'd had too much largesse coming in. I would position it something that we've lost sight of today as we try to drive through inclusion. We're playing it a little too risk safe in this regard. I think that while we put some guardrails in place, we could really drive the agenda. We're right up on the time. Look, there were two good questions in there, at least, that I saw. There we go. Flora and Diana, from an emerging markets perspective, what are the biggest challenges you think consumers face? Is it access to technology, affordability, or digital literacy? If I was asking this, I'd tell you there's a right answer, but Flora and Diana.
I'll come in. Yeah, I'll come in. So I think it actually really leads on from what you just said about tilting the balance. I personally, from my experience, it's not been any of these things. There's a huge available technology which is really adapted to price points, appropriate. The affordability is actually pretty relative in emerging markets. Having just been in Kenya before Christmas, so in Nairobi, huge tech adoption. So that sort of thing. And the digital literacy is just, I think, way above. So we are having these discussions, and the consumer representatives were challenging the Western, Northern European orthodoxy that older people can't use technology by saying, no, these are some of the biggest adopters of consumer technology in Africa is older people. The idea that it's excluding parts of society is a kind of a Northern European concept, much more. So I would actually think, linking it to Peter, what you said, what I noted is that access to infrastructure is one of the key challenges. So there isn't necessarily, and Dana pointed to this earlier on, is that payments infrastructure, Amir also talked about it, the actual financial infrastructure isn't necessarily there. And the technological infrastructure may not necessarily be there to deliver the adoption that's there, but also particularly, I think, talking to the telcos in financial services and fintech in Africa and global south, is the dominance of uncompetitive providers, and they may be owned by a Northern European or a North American business, but they've got a local brand and they own the entire thing, and everybody thinks it's great innovation. We've got certain payment technologies everyone really celebrates because they've driven inclusion, but they're actually underpinning the dominance of a single European HQ'd business or North American HQ'd business. So that would be linking back to the tilting the balance, is actually thinking about how do we make sure that those companies aren't exploiting developing markets.
So we're right at time, Diana. I'll give you a chance to respond as well, and then what I'll get to do as I beg largesse from my boss Luca is to run round the table very quickly, and you have 7.5 words to make your final statements and give some advice. I'll make it 15 for each of you, but very quickly, Diana. But you get to respond to that question, please.
Thank you. I just wanted to complement what Flora was saying, because I thought it was actually really accurate. In the global south, and I can say this because I am actually in Uruguay at the moment, where I was born and raised. Actually, internet, digital literacy is incredibly high, and there is huge internet penetration. It's been disrupting traditional businesses and really lowering entry barriers for SMEs and for consumers. There's a very interesting study that McKinsey did over consumers in Asia that talks about access curves. So if you think about accessing premium products and services in the past, they used to have an S curve. So depending on your level of income, you would actually have access to a certain level of products and services. Because of digitalization, these access curves have flattened. And so more consumers of very different levels of income can actually access the same levels of products and services. So if you think about what is happening in the emerging markets, what is missing is actually that infrastructure, so that the access to products and services gets facilitated. And so that these products and services, as they are increasingly global, enable that interoperability so that consumers can basically pay across borders. Sorry, that was a little bit more than 15 words.
You get 15 more, but thank you very much. Very quick whip around. Amira, 15-word summation as to where people should look for the next wave. You've already given us interoperability and identities, so you're getting the hot seat as to what else you want to come up with. 15 words, go.
No pressure. So two things. I think that the key to unlocking the promise of fintech lies in having regulators that have a growth mindset, right? It's not really just about having precise, concise, well-enforced regulation and rules and the supervisory approach we talked about, but regulators that are willing to experiment and pilot alongside fintechs as well as SMEs, spanning the spectrum of informal companies and SMEs and to tech-forward startups. So really looking forward to collaborating with regulators with a growth mindset. The other thing is, I would be remiss if I didn't highlight that soft infrastructure is just as important as hard infrastructure. We've talked about access to financial infrastructure, and I think that's really important. But at the end of the day, trust is built with familiarity as well as with critical collaboration across the public and private sectors. So let's also focus on soft infrastructure as we continue to work with fintechs.
if they're going to work with SMEs, they're going to have to like SMEs and want to enjoy the company of SMEs. Flora, please. She used some of your 15 words.
No, I'm going to be very clear just in summation. I think that interoperability between regulators really thinking about how cross-border infrastructure works, measures to drive competition, especially even to tilt the balance in favor of the disruptors, and then proportionate outcomes-based regulation. Let's just make sure we don't miss out on that really important driver of better outcomes for consumers and small businesses.
Nicely done. Rami, 15 words.
Yeah, I'll connect to the outcomes-based angle, and just a quick anecdote. When in my final days at World Bank, Ajay Banga had just arrived from MasterCard, and in his opening speech to staff, very motivational comment about payment rails are the most critical foundation layer of development. If you cannot have rails for money movement that is safe, that is reliable, that is fast, that is secure, no other development angle can be achieved. And I couldn't agree more with that statement. And it's been a huge move deeper into the payment system to see how I can better support that objective. I think economic outcomes as the end goal is critical, and it's something we're trying to do a lot more now at Visa, with trying to look at the development, evidence-based development impacts of different decisions that are guiding interoperability and various other themes that we've discussed today. So outcomes-based research, I think, is crucial.
You're a gentleman and a scholar. I said you were the diplomat. I'm married to one. Calling out MasterCard as you finish up, that's a very diplomatic touch. Good for you, sir. Mimi, over to you. 15 words.
So I think RegTech is going to be on the rise, and certainly new technologies like AI will sort of accelerate the importance of using technology to help fintechs deliver more products and services to SMEs. And so at Deriskly, we are coming up with an innovative RegTech solution that helps boost customer understanding based on different customer groups. So I think this is the space to watch. And yeah, so this is an area where regulation innovation goes hand in hand.
And Diana, final words to you.
Thank you. I just wanted to finish off by highlighting the huge sense of opportunity. All the things that we've been discussing have a huge underlying opportunity for creating that inclusive growth across the world. Over the next decade, Africa will have more consumer spending than Europe. India is going to become the world's third largest economy. And in Latin America, where I sit, we're going to reach nearly universal internet penetration. And so as we think about all the topics that we've discussed today, and as we try to create the outcomes across the world, let's really think about the emerging markets as a place of opportunity.
Thank you. So to Amira Karim at Amazon, Flora Coleman at Klarna, Rami Amin at Visa, Mimi Zoe at Deriskly, and last but not least at all, Diana Baitler from dLocal. Thank you very much. It's been a pleasure to be with such smart and vested stakeholders here. And I'd like to just say very quickly, thank you for the number of times you called out my company as you were talking about this, the perpetual use of access. That was lovely. Hats off to all of you. So thank you very much. Thank you.
Thank you.
Thank you.
Thanks, Peter. Thanks, everyone.
Thank you.
Thank you. It was really nice getting to